What's up, YouTube? It's Joe Catapolio sitting on the couch, making some money investing in fractional real estate online, as usual. Tonight I was going through my favorite book again, The Most Important Thing. If you haven't read this yet, I really recommend it. I think I've talked to you guys about it a ton of times. I like to just go back and look at things. I just came across chapter 10 again, which it feels like I'm kind of going in order. I don't think I've done 10 of these yet. But he talks a lot about, the emotional impact, or like how emotions impact our investing. It's something I like to ignore. I think a lot of people like me who tend to be more analytical, we like to believe that our emotions don't affect our investing. It's 100% not true. But this one hit me really, really hard today because I've noticed a lot of the things that he talks about in here really playing out, especially on Lofty lately and in the Discord and getting to talk to other investors. I could see a lot of these things that a lot of the Y-Home, the Yom management changeover and how that worked out, how that played out. You could see like a lot of the mistakes that people have made along the way have been, not due to a lack of, intellectual understanding of what's going on, but much more so, a lot of these psychological or feelings-based mistakes. And so I wanted to talk a little bit about these are the ones that, and this is Howard Marks. So these are the ones he talks about in, affecting investing the most. And I think that he's probably right. I mean, I'm not a I say obviously I'm not a psychologist. I mean, I have been done a lot of different stuff in real estate. So, sometimes I take for granted that people know, I was an attorney. I worked in appraisal for a while. I've worked in brokerage. I've worked in lending. Done a little bit of everything. So maybe it wouldn't be a crazy surprise to hear that I was a psychologist for a while, but I wasn't. I had no experience in that whatsoever. I've read a lot about it as it relates to investing, and I think that it's super important. And when I look back in my career of investing, the big mistakes that I've made have not been because of a lack of knowledge or a lack of understanding, some technical detail, but definitely have come down to one of these or several of these emotions or, psychological effects. So, the greed, fear, self-deceit or willingness to suspend disbelief, conformity to the herd, envy, capitulation. I'm going to talk a little bit about each one of those and just some examples that I've seen recently, how it pertains to, investing in fractional real estate, but then also go over, what tools we have to make sure that we're not falling into these traps. Because like I said, I mean, it's something that times that I've struggled in investing have often been because of one or more of these emotions, and I see it happening to people quite a bit. I mean, the first one, greed, I think it's super, it's very obvious. I think a lot of times the people that have lost the most money on this platform and lots of different platforms, they're just chasing the highest number they see, right? Like and they let that desire for this huge return pull them into, places where they really shouldn't be investing, where they're ignoring the risk of that investment. And again, I mean, I mentioned, that I think a lot of it can relate to the whole Yom debacle and a lot of how we got there to begin with, right? And so a lot of people had, there were some really discounted properties that people wanted to, you needed to make, they were looking for a way to make money. Someone comes along and says, hey, I can take this from, it's a $20 token right now, and we can make this a $50 token again, right? Despite, whether or not, in many situations, in many of the cases, I think it just was never going to happen. But, people can get, I mean, it's just a matter of greed. Like, I think I'm going to make all this money. I think I'm going to go from here to here. I'm going to make a return that's significantly better than the market, um, or I'm just going to buy the token with the highest yield and not really understand where that yield's coming from and if it's going to if it's going to be maintained. Those are ways that I think greed is one of the more obvious ones. Fear being the next one, and that's again one that a lot of investors. So this happens in a couple of different ways. If you've had some losses already, a lot of people are end up selling their tokens as the price goes down because they're afraid that it's going to continue to go down. Where oftentimes the rational decision, if it made sense to buy it at 50, it makes a lot more sense to buy it at 25, right? And so a lot of times it's that fear of loss because you've already experienced some loss that leads people to make poor decisions. I also think there was a lot of people that had already experienced the loss in a lot of those properties, and the fear of that continuing led people to just latch on to the first person that provided, some solution and some type of, some safety, right? Like, oh, you can trust me. I'm going to take care of this. It's going to be different than it was before. That really plays to people's fears, made them feel safe in a way that they gave up some control that they probably shouldn't have. There's a great Benjamin Franklin quote that is something like, anybody who would give up this is definitely not word for word, but it's something like anybody who would give up liberty for security deserves neither, right? Like you're giving up a little bit of your freedom, handing over, in this case, it's handing over control of the property in order to feel, somebody's going to do a better job with it. I don't know. It's maybe not exactly related, right? He's more talking about. Anyway, I'm not going to get into politics, but I think it's a great quote. I like to read his stuff too. Anyway, but so you can see how fear in a lot of different ways really hurts investors. I think more so than, even though I think that's a good example of, as if your token's lost a lot of value, you want to just give over control to somebody, who's promising to keep that from happening further. But even, I think the more common example is the people sell after they've lost some because they're afraid they're going to lose more, where, the opposite response probably makes sense. When I bought a token and the price is starting to fall, almost always I'm trying to buy more of that token because I'm averaging down my basis, and if I am, more certain in my belief about what the intrinsic value is, then obviously it makes sense, I'm basically getting it on sale. The willingness to suspend disbelief or self-deceit is one that I think, I haven't really heard talked about the way that Howard Marks does a little bit, but he's basically, saying that the things that we want, we want to believe that things are the way we want them to be, right? Like, if I have a certain investment and I want it to do, I want it to do very well, so it's easy for me to make myself believe that it will. And he talks a lot about, I'm not going to give you all the details of everything, but he talks a lot about how the way that it works is like there's usually some small part, part of it that's true. Again, related to like handing, your property management, like, it is, this is a spot where, you could see that for a long time after it became clear to some of us that, things weren't really going the way that we wanted them to, there was still a whole bunch of people that, believed that, that just, they really suspended the disbelief of it being the right decision, right? They wanted to think that they had made the right decision in choosing someone new to take things over and to sort of giving up control and unfortunately, because it would be they'd be better off if that had been a good decision, right? It's easy to just try to convince yourself, no, we should just stick with that. It's the right thing. we made a good decision in the past. And so I think because of that willingness to that willing self-deception that a lot of people have, it led to it made it take a lot longer to realize that things maybe weren't going as well as they could. And that kind of also plays into a little bit, although it's a separate issue, is wanting to conform to the herd, right? Like especially once there was some momentum and once a lot of properties had moved in that direction, more and more people thought that was the right answer, and so it became very a lot of times people in investing, this a more common example in the stock market, as the price moves higher and higher in the market in general, you actually get more and more people entering the market and wanting to invest. And if you think about, is that a rational decision? Well, it's not, right? I mean, everything else in the world, you buy more when it's on sale. But for some reason, investments, as they've moved up, you start to get people that are buying more, and it's because it's because they're seeing other people do it, and as more and more people do it, they want to conform. But then it also goes into the next one a little bit as well, which is envy, right? Like if you see somebody else making some money, the first thing that a lot of people want to do is they want to do it too, right? He talked a little bit about how there were these investors that were making 16% returns at one point in time, but everybody else they knew were making 23, and so they were unhappy. But it's because they were being a little bit more conservative. And then, in the years that followed, because they were more conservative, when the market went down, they were still making 3% a year. Everybody else was losing money, and they were very happy with that result. Well, if you think about that logically, being unhappy when you're making 16% returns, but happy when you're making 3, it doesn't make any sense at all. But this is just a part of human nature where a lot of our happiness comes from comparing our what we have to what somebody else has. And so again, like it's funny, I see this play out on Lofty quite a bit, because there's a Discord and people talk about what they're buying, and there's a few people, and I know they're just kind of being funny about it too, and it's not a ton of money, but there's a few people that, like, if they know you've got a certain amount of tokens, they want to have just a few more of a certain property, right? And they'll buy more. And oftentimes it's not a great decision because the price might not be the same as when you bought them or whatnot. And so that's one, I think that comes into play quite a bit. I think that in general, like a lot of people that I know, one of my busiest days in my day job is often Thanksgiving or the day after Thanksgiving, or Christmas afternoon or the day after Christmas afternoon. In years where a lot of people are sitting around with their family talking about how great their real estate investments are doing, all of a sudden somebody who's not invested in real estate decides that day, hey, you know what, I'm going to go out and start buying some so those are some of my busiest days for new leads, which is just really a strange phenomenon. But I really believe it's because they hear, you hear your brother-in-law is making money in real estate, or you hear, somebody else at Thanksgiving dinner, was telling their story about how well they're doing, and you just want to do the same. And so it's always been funny to me because, you think that that's a day off and nobody's thinking about investing, but because they hear other people's stories, that's always been a pretty busy day for me. And then, capitulation is, this is sort of, it's not exactly an emotion, but it's, the way he really talks about this is, you keep seeing somebody making money doing something, and then, he's got an example of, if you know somebody at work who keeps investing in IPOs, and every time the day that the day that it goes, the day that it actually opens, they double their money or more, and you keep seeing them do that, and so finally you decide, okay, I'm going to do it too. Even though the further along, like it doesn't make rational sense that the market keeps, overvaluing things, but you see other people investing more and more, and you see it happening more and more, even though it might be an irrational market and it's getting closer and closer to the point where it's not going to perform that way, eventually, some people just get tired of sitting on the sideline. You see this. This was a really strange effect in real estate. As during the COVID time frame, a lot of people jumped into investing in real estate, and it was a very busy time in my business helping investors find property. But one of the things that was sort of funny is close to the end, or close to like when rates started to move up higher and deals made less and less sense. I had a really big rush of people just like being like, okay, you know what? I've been thinking about this for a couple years. I need to do this now, right? And a lot of those people jumped in at a time when it was not maybe at the peak. And some markets had a real peak. Some had like a little dip afterwards, and now we're moving back up. But there was a lot of this people that had just continued to not want to enter after so many years of deals just going really well. A lot of them jumped in, and so those are obviously that's not like a detailed description of any of those, but I think that hopefully that gave you some of the general ideas of things that the types of feelings and psychological states or whatever that can really affect the way that we make investment decisions. And I want to, even though I talk about a lot of other people, I want to make it clear I am in no way immune to this. So I'll give you an example of where I really let fear get in my way. Where is it? Here, Colfax, right? This property here, at one point in the last month or so, I don't know if it's going to actually show up here. Yeah, it doesn't show up on here because they're having a problem where we only get 30 days of data right now. But at one point, this sold for like $4 or $5 per token. That's insanely cheap, right? I mean, it's obviously come back, and I didn't buy tokens, even though I am very routinely buying discounted tokens. I really just, got worried that all the negative stuff that I've heard about this property was real, right? I really let the fear get to me, and maybe a little bit of conforming to the herd, right? And like people who are just like, oh, that is the absolute worst one. There's all kinds of problems with it, and yeah, I mean, I know I missed the absolute cheapest tokens, but the fact that I didn't buy some of these when they were at single digits, I don't know, I'm kind of kicking myself now because I could have already exited. And I know Earl's taking this one over, and I think it's going to make a huge difference. That's actually one thing, though, that's a good point, is that, the prices on a lot of these that have new managers have changed drastically, and nothing has really changed about those properties yet. A lot of them haven't been turned over yet, or that's just in the process. And so it's really just about, some optimism for the future that's moving a lot of these prices. And so I think that's important to keep in mind. But so then, in general, like, okay, we acknowledge these issues exist, right? Like, all of us are humans. They're going to have an impact on the way we go about, operating in the world. So what are the tools that we can use to keep from having those issues, right? Like, what can we do? And so, what am I doing here? So the first one that he talks about is having a strongly held sense of the intrinsic value. And this is the number one thing I'm always talking about on this channel, right? Like I talk about some of this property pretty regularly. It's because the number one reason that I do is I believe that this $20 token price or sub $20 token price, that the intrinsic value of this property is significantly higher than that. And so despite anything else that goes on, when I see, okay, we're going to have to raise capital, there's different problems, it took us a while to rent it. Despite all those issues, I've been able to keep buying this one without much hesitation, and it's been really just because I have a really strong belief in what the intrinsic value of this property is. And so that's one of the things when you see like these when we're talking about like market moves uh, that are being ignored, right? Like whether it's greed or fear, neither of those are really tied to what we actually believe the asset's worth. Um, the next one that you talked about is having an insistence on acting the right way when prices diverge from values, and that just means like in general, I want to have a commitment to when prices go down, I'm a buyer, right? And just really committing to that thought. Like I buy when prices go down. I'm never a seller only because of price. Now, if there's new information that's leading to that price going down, and it makes me have a different belief in the intrinsic value, well, that's a different story, right? But in general, just understanding that I don't buy more when prices go up, and I do buy more when prices go down. Just a commitment to those two things makes a huge difference. And when I look at and talk to a lot of other people, there's definitely people that are like, oh, look at this one's on the move, it's going up, let me buy that. And it's a really irrational, it's the thought process is it's a momentum play, but it's really an irrational way to buy something, right? If we think about trading dollars for value, the fact that it's gone up in price doesn't mean it's worth more. And so that's one. The other one is really understanding past cycles and the history of markets. Either through reading or through experience. This is one thing that I think has helped me a lot on Lofty is, I've been investing in real estate for 20 years before I found this platform. I worked in the industry all through the great financial crisis. And so had a really good base of understanding like how prices move in real estate, how what we should expect as far as cyclicality of short-term rentals, because I've worked in that space a lot. How the properties themselves, how your cash flow is going to ebb and flow as you have turnover and capex and whatnot. All of those things, understanding that sort of stuff makes it easier to make smart decisions. Like I've never sold one of these tokens just because the yield went to zero because something happened that particular month. I mean, I think having an understanding of how these, one of the things that I'm having to learn is how the cycles work on Lofty, right? Because it's a different type of market. We have very, the investors on here do not make decisions as a herd, as a group, are not doing the things as what I think a rational value investor would most of the time. And so, that's one of the things that I'm having to understand more and more. And really, one of the things I think that makes it that you can really take advantage of on here is as those prices move, as you start to see certain patterns, I think it's a way that we can make money and also avoid, if I know a property is going to tank when the yield goes to zero, it doesn't scare me when it goes down. So I don't have that fear. I don't have that, I'm not selling because everybody else is selling. I'm not capitulating there as far as like, just being negative on the market. Having a thorough understanding of these psychological effects is one of the easiest ways to combat them. And that's one that I think, like I said, I really wanted to, I wanted to ignore this. I'm not a talk about your feelings person. I'm not somebody who's a big believer in therapy or any of that stuff. And what if that works for you? I don't mean to in any way be negative towards it, but it's just not something. I like to believe I'm someone who makes rational decisions and not emotionally based decisions. But the simple fact is nobody makes purely rational decisions, right? We're not robots. One of the things that, and this is a good example of something I never realized. At some point in time, I was looking back at pictures of all the old deals that I had invested in and that I had helped other people invest in, and I realized that I definitely was, had a strong bias towards deals that reminded me of my childhood home. like as I would go through, when I was going through pictures, I had put together a little portfolio of deals, and it struck me then that, one particular color and one particular style of home both stood out as being overrepresented. And although I didn't find any examples of where that impacted my decision making to the point where it like wasn't a good investment, the fact that they were overrepresented in the portfolio at all means that it was definitely having an impact on me subconsciously, right? And so there's definitely always these, as much as you want to just believe that you're a rational sort of robotic investor, it's never going to be the case. And so understanding how certain emotions might play into different investment decisions is really important in in avoiding them. His next thing is saying, just promising to yourself that you're always going to remember if something looks too good to be true, it probably is. I think this is just something that is, it's 100% like there's, I say that, and then at the same time, I'm getting, returns on some of the lofty properties, that I think, like, I've showed you several, but like this one here, this Avenue L sale, this is under contract to sell in the high $30 per token. I had bought it in the, low 20s. As long as that sale goes through, this is going to be another phenomenal deal, just like the Kilo property was for me, just like the Dresden property was for me. A lot of these deals, I get hesitant to tell people about them because they do seem too good to be true, and that is something that I'm very aware of. But now, on the flip side of that, there's not an unlimited number of tokens available in all of these, and so even though the percent returns are fantastic, it's small dollar amounts, and so, so the return on time for finding these deals and, buying the tokens when they're available is what I think, I think that's where they become the exception, right? Like, I think when people chase these, like, really unbelievably high returns is when they get into a lot of trouble. If you think you're going to be, like, for example, Warren Buffett's average returns are less than 20% per year compounded, right? But there's a lot of people that think, oh, I'm going to be buying these tokens and I'm going to get 21% over the long run. Well, no, you're probably not, right? Like, if you think that you're, if you think you're buying stuff and you're going to outperform one of the greatest investors in history in the long run, I think that the more likely scenario is that you don't understand the risk that you're taking in a particular deal, right? And so, or, and this is where I was going with this, or what you're actually doing is you're trading some of your time for money. So you're getting some return from the investment, and then you're getting the rest of that money that you make is actually that you're just spending the additional time to, be an active trader or to make something happen with the property. You're doing something different. So it's not just a pure investment style return. And so promising yourself if it's too good, that you will believe if it's too good to be true, that it's probably not. The next one is having, a willingness to look wrong, and I think this one's super important. Like, there are, especially now that I'm working on building a community and talking to a lot of you, there are times where I will look at a deal and several of you will have invested in that deal, or be excited about it, and I will look through it and think this is just not something that I would invest in, and these are my reasons. And sometimes it's tough to come out and say that, right? Especially when some of the deals get put out by people that I respect and I think they do a good job and I think they make good choices. I think this actually also applies a lot on Mogul, right? Like when I'm looking at, I don't have a tab up for Mogul right now, but when I'm looking at deals on Mogul, because they have what I think is a good track record now of putting out deals that I really like. Oh, that reminds me, please like and subscribe. And I have links in the description to this video to all the places that I do invest. Just because I invest on those doesn't mean that you should. Please do your due diligence on any of the platforms I mentioned and on any of the properties that I mentioned. Just because I've invested in some of these doesn't mean that you should. You always want to just, think about your own personal financial situation, look into the properties and the platforms yourself, and all that. Um, but yeah, so when I am doing a video and, I know these guys are professionals and they're, have a track record of buying great deals, and I'm sitting here saying, well, I'm not going to buy this one, and this is why. Um, that's not always an easy position to take, but I think that if I truly believe I see something that they don't, or I just see it differently than them, I don't want to fall into, that herd mentality. I don't want to, just do what everybody else is doing. So, sometimes you have to be willing to stick out and to look wrong, and maybe even to be wrong, right? And this happens too, in markets when everybody else is buying. Well, okay, now the price is really high. Everybody else is buying, but I'm not going to buy right now because I'm not buying at that high price. Well, I have to be willing to look wrong and maybe be wrong. Right? Maybe it's going to move up another 10%, and I missed out on that. Um, but again, I'm focused on the intrinsic value, and if it's deviating too far from there, I'm going to do what I believe is the right thing. And then the last thing that he mentions that you should do is find a group of like-minded friends and colleagues, that are all going to support each other. And so this is, I've mentioned this several times. This is my whole purpose for having this channel at this point. At first, my sort of idea for what I'm doing here has changed quite a bit since I started it. But like building a community. If you look in the description of this video, there's a link to a Discord that is just where I'm talking with several other investors about fractional real estate investing, trying to meet like-minded people that are thinking about deals the same way. Now, at the same time, it doesn't mean if you have different thoughts than me that you're not invited. I want anybody who's a rational. Who's thinking rationally and looking at deals. I want to hear your thoughts on properties, and that's why I'm always trying to create these discussions. But in general, I hope that most of us are coming from a similar place of wanting to, look at what the real value of something is, versus you will not ever hear me talking about charts and. I'm a value investor. I'm not looking at, I'm trying to think, I'm not a technical investor, right? Like looking at charts, I really believe that stuff is like astrology for finance guys. I think it is sometimes works, but mostly works because people believe it works. And when you get outside of, certain situations, then it all falls apart. And so, hopefully most of the people here are firm believers in, investing in the intrinsic value of the properties that we're looking at, and can sort of, support one another in those sorts of things, right? And if you see me talking about properties or a certain investment or a new platform, and it's clear that I'm being lured by greed, or I'm letting my fear take over. I'm deceiving myself about something. Any of these things, right? Let me know. I'd like to hear about it. I think that I'm always open to criticism and advice, and learning from the rest of you guys. So I think that's really all I want to do. Just I know. It would have probably taken you less time to read the chapter of that book than it would to listen to this video. But I wanted to relate it to some of the stuff that I've seen. And I don't even know why one of the things he mentioned was ego, and I didn't put it on my list. But I think that this is, I don't even know how I missed it on there. One of the things that I think that I wanted to just point out is in general, I think that there's some of the people have such a strong desire to be right that they let it get in the way of making money, right? And so that's one of the things that I think when ego comes into play a little bit. Um, you know, there have been many different messes as far as properties not being run the right way, people sometimes to the extent that people think they're being defrauded or there's some grift going on. Whether or not that's the case, is still yet to be seen in most cases. But in certain instances, there's people I think that are more caught up in wanting to be vindicated on a certain thing than they are in thinking, okay, let me exit this property I can do so profitably, and let's move my money into one that I'm actually going to make money on. There is a decent amount of that going on too, where it's just like people are more caught up in the emotion of the fight, in the in the disagreement, and wanting to make things right, and are thinking of that more than, okay, this is an investment platform, and how am I actually going to make money based on what's happening here? So that's one of the other things. Oh, I missed that. Felt like I typed his list up, but I don't know. I'm always messing this stuff up. I really though, I think that it's something I don't talk a lot about. I probably won't bring it up a whole bunch more times, but if I should more often. All of this, like I said, I believe it affects all of us. I know it's impacted me, and I've made some, suboptimal investing decisions because of some of these feelings or psychological effects. And so I think the more we can, point them out when they're happening, and then I think the number one thing is like having a strong sense of what the intrinsic value of these investments are. To me, that is always the guiding light as far as decision making, and so it should always be focus of like when we're making a buy or sell decision. It's easy to get caught up in all these other ideas. Okay, now I think I'm really done. But I am curious what other people think about this stuff. If it's something that you believe has had a big impact on your investing career or not. And if not, what do you think you've done differently than the typical investor? And that's it. Okay. So until next time, I will keep making mistakes so that you don't have to.